So I'm sure you've heard of VWAP before, and you may use it as a price target, as a support, or as a resistance, which can all work okay, but it's not a defined trading strategy. So in this video, what I want to do is really dive deep into, what is the VWAP? How do you actually use it? And I'm going to be showing you guys my personal trading strategy I use around the VWAP. It's one of my favorite setups I take. It's my highest win rate setup as well. And like I said, I'm going to be breaking that down in this video and giving you guys real trade examples. So with that being said, let's dive straight into it. Okay, so what actually is the VWAP and why is it an indicator? What is it used for? Now, the thing I like most about the VWAP is, it's in the name itself. It factors in volume, right? So it's the volume weighted average price, right? And the coolest thing about the VWAP is it doesn't change on every time frame. You look at a moving average in EMA, right? There's all kinds of different settings. You can use a 9 EMA, a 20 EMA, a 50 EMA, and then that 50 EMA is going to be different on a 1 minute time frame, a 2 minute time frame, a 5 minute time frame, right? And that gets really confusing, and it can make it so you have, a million different lines on your chart. The VWAP is the same across all time frames, and there's not really any settings you change besides if you want to tweak the deviation levels, okay? So this is what I like about the VWAP is it stays the same, and a lot of people are looking at these levels, so they're respected, right? And another thing is, a lot of institutions use the VWAP to see where the fair value price is, where price is undervalued, where it's overvalued. These are all things we can look at when it comes to the VWAP. So if you just type in VWAP, I just use the standard one, volume weighted average price. And then the only thing I change is I do add deviation levels to it, which is key in my strategy, okay? So if you just go over the settings, everything's default here besides my bands calculation mode. I change that to percentage. And I have these three numbers, okay? So make sure you put 0.235, 0.47, and 0.705. These are just the percentages of the deviations of the VWAP. So, and then we have the style. You can change these colors to however you want. And you should look something like this, okay? Now, I do trade NASDAQ futures for those that don't know, but I'm looking at QQQ levels. I'm looking at the VWAP on QQQ specifically. Now, why do I use the QQQ VWAP over the NASDAQ VWAP or the SPY VWAP over the ES VWAP? This is because there's simply just more volume traded on QQQ and SPY. Compared to the futures contract, for example, NQ, it has way less volume than QQQ. Okay, so therefore it makes more sense to look at the volume weighted average price on the thing that has more volume, right? More transactions are being traded on this. So it's going to be a little bit more accurate. Now, the way I personally use VWAP, and we can just go day by day, I'm not going to cherry pick days, is we're looking at, first what it represents, right? VWAP is the fair value price. So if we have a more balanced range day, the market likes to pull to one extreme and to another, and then it likes to, go to that fair value, right? So what happens is, on a more balanced day, we're going to see price action like this, where we get above VWAP to that first band, we're going to pull back to it, we're going to go to the lower band, we're going to pull back to it, we're going to go to the upper band, we're going to pull back to it. Then maybe it's going to rubber band into, the second or third band even, then it's going to pull back to the VWAP. And price is constantly going to, revert back to that fair value price. Now, the next thing that could happen, and we can go to another day, is where price stays a little bit more above the fair value price, right? Meaning maybe the trend is stronger, there's just more buyers in the market, and the price isn't as likely to come back to that fair value, even though it did towards the end of the day, right? But it's going to be more accepted to be a little bit overvalued, okay? And that's what can happen some days on more trendy days, whether it's to the downside or to the upside. Okay, you can see a day like this or a day like this. Day like this, you can see we're only at the VWAP the first few minutes, and then we pulled and stayed above it this whole time because buyers were okay with continuing to buy, right? Even though we're above that fair value price because that trend was stronger that day. Okay, so that's kind of how I think of it. Now, the way I actually use VWAP and my actual strategy behind it is I'm looking for pullbacks to one of the deviations below VWAP. And really the only criteria is we need to see price, be somewhere at VWAP or above it. and pull back to one of these deviation levels below it. And that's what I'm looking for. And I want it to be the first pullback, right? Because chances are that first pullback is a lot more likely to get bought up. I also use an indicator called WVF. You could just search that in. It stands for Williams Fix. And I'm looking for these green bars to bottom out. Okay, so this represents volatility expansion. When volatility increases, it usually causes the market to sell off, right? And as soon as it starts decreasing, right, that means sellers are exhausted and there's a good chance buyers are stepping in and we're going to revert back to that fair value, right? So you can see these green bars are peaking, showing volatility expansion. Then it lowers, right? And then I'm looking for a bullish candle, okay? So as you can see, red candle, red candle, red candle. This volatility peaks again, right? And then we get a bullish candle right here with the volatility lowering. It's kind of hard to see, but that bar is slightly smaller than that peak bar, right? And this is where we'd enter the trade, assuming that we're going to revert back to that fair value price, right? And you can see not a huge risk reward on that one, but that's the idea of how the strategy works. Sometimes we pull back to the second deviation and we get a lot bigger risk reward back to that VWAP area. And, we can kind of go day by day and, kind of look at a bunch of examples, but we can see this day, we originally traded near the VWAP, right? So that's criteria one. We want to trade near the VWAP or above it and have the first pullback we get to that first deviation, the entry point. Okay, so here we pulled back to that first deviation. By the time we could enter this trade, the price is already at VWAP because we really don't know. Usually it'll go to this first deviation above, but the VWAP is going to be the safest target. But this is essentially the criteria. We can see today was super choppy, or this day, sorry, was super choppy. How do we stay out of the chop? Well, as you can see, we never got to one of our deviation levels, right? So we simply don't trade it. And that's a great way to avoid choppy days, is by simply just avoiding price action near the VWAP, right? Where most people, they see VWAP as a support. Oh, I want to buy at VWAP. I want to buy at VWAP. Well, you got to keep in mind there's a lot of algorithms that trade around the VWAP and price can get super choppy and dangerous. So that's why I like to pull back to that undervalued price so I get a good deal on it if I think the market's going to go back up, right? If the market looks like it's a more balanced day or even a more bullish day. If it's a bullish day and we pull back to a second deviation level, right? What does this tell us? The price is super undervalued. We want to buy here and trade it back to that fair value price, right? Back to the real market price. So you can see a bunch of examples. If I just go back on the chart, you can see, this day, kind of too late to enter, pulled back to that first deviation, was holding good. Volatility expansion started lowering. We could trade it back to the VWAP, trade it back to the VWAP, right? We can go to another day. As you can see, we sell off to this second deviation way down here. Volatility peaked out, right? You can see volatility expansion peaked out and then it lowered, and then we enter and trade it back to that fair value price. Okay, now some days what can happen, and I'm trying to find an example of where this doesn't work, right, is maybe this day it kind of worked where we come back to the VWAP after we pull back, but there's some days where we just sell off, right? And for example, let's say this never happened, right? Because this will happen where, maybe we don't pull back and we just go straight through it, right? And how do we avoid losses like these? Okay, so what I like to do, and one of the things I keep saying in this is I want to make sure that the market is going to be balanced, right? So if I want to trade back to VWAP, right? VWAP is my target for the setup, right? I want to make sure that it's going to be a balanced or bullish day. Okay, if the market's going to be more balanced or even bullish, then balance means we're going to go back to fair value, right? That's literally the definition of what balance is that fair value price, right? Or bullish, meaning we're going to go above the fair value price, right? That's even better. If I can get a deal down here and it's balanced, we're going to go back to the fair value. If I can get a deal down here or down here and it's bullish, we're probably going to go to that first deviation, right? And this is kind of what I want to see. So how do you actually know if the market's going to be, balanced or bullish? Well, this is another confirmation I add on to the strategy using institutional positioning. Okay, so I have a software called Market Flow, and it basically reads the balance of the market. And it looks at all this data from the Greeks in the options market, and our code calculates it into these bar charts, right? We use a couple filters in there, but this is basically looking at the Greeks and seeing the contracts in the options market and seeing the balance and where institutions are positioned, essentially. So for example, if we just go day by day, we're just gonna go to the day before this. And this day, there wasn't really a setup. As you can see, the market just went straight up after the open. We never pulled back to that first deviation. So let's go to the day before this. And this is a good example, right? This is a day where, as you can see, it didn't really work, right? We pulled back to, these candles were kind of big, but we pulled back to that first deviation, and we actually did go back to the VWAP, but you wouldn't have been able to enter this. But then we kept selling off, right? What if you tried buying at this, second deviation or third deviation, right? You would have, ran into some stops before we eventually pulled back to it. So how do we avoid days like these knowing that, the market's a little bit more bearish? Well, like I said, I like to see the flows and the institutional positioning in the options market. And obviously Market Flow reads this data for us. So for example, I can go to November 18th was on this day. I'm going to go to our replay mode, and we're going to go to November 18th. We can see if we go to the first minute market open, pay more attention to this column right here, this delta hedging. We can see it's a little bit more, the market just opened. So let's see where price is, right? So market basically opened right here at 600. Okay. So if we go to where we started pulling back to that first deviation, let's go to 743, which is 9:43 Eastern time. So I'm going to go forward around 12 minutes, right? You can see what happens is we break this negative bar, right? The 600 level. So now we're trading in negative territory, which means it's going to be more bearish. There's more negative positioning, right? Which screams a bearish market. So I don't want to trade longs in this area because this is telling me if we do pull back to one of these, deviations, right? The market's not undervalued because we're bearish. The market would only be undervalued under VWAP if the market is balanced or bullish, meaning we're going to go back to fair value. But there's not really any guarantee we're going to go back to fair value when the market's negative, right? And it's screaming bearish. So me personally, I just avoid trading the strategy altogether when we're in negative territory, right? Now let's go to another example. So we know just to ignore trading that day. Don't trade that setup. Okay, we go to the next day and we can see, let's go to market open up. We immediately ripped up above VWAP and then we pull back like right here. Could have got an entry on this candle right here. Had like a nice 1-to-1 risk reward. So let's go to this day. This is November 17th at around 10:10 Eastern time. So we're going to go back a day, November 17th. We're going to go to 10:10, right? That's what I said. Okay, and you can see what happens here is we're pulling back. Okay, we're in positive. Okay, so we were at 612 up here. Okay, and then the market sold off to this 608 level. Okay, so where is 612 on these bars? It's around right here. So we were in positive. Then as you can see, we pulled back to negative. Okay, now here's the thing about going from positive to negative. Usually the first two negative bars are going to get defended because market makers, institutions, they don't want the market to go negative, right? If we break down in this negative territory, the market gets super volatile, and that's why, when we have sell-off days, they're usually massive sell-off days because the market gets super volatile. They have to flip all their hedges into shorts, and the market just gets really crazy. So usually they try and defend this area knowing that the market's pretty balanced. We can see on the institutional flow, we have lots of buying interests up here and, we have a decent amount of selling interest, but not quite as much. You can also see this is on SPY. We can see SPY is going to have a big wall at 670, right? Price is currently at 671 at this time. And this lines up with QQQ. being at this level right here. So you can see this is 608, right? Chances are this is going to be defended because SPY is going to be defended as well. It's that first negative bar, right? And this is typically what I look for. I want us to see us have a defense area, right? I want to see the institutions defending this level because they're the ones who are going to move the markets, right? They control most of market volume. So if I see there's big defense at 608, right, and it lines up with that VWAP concept, right, I can get in, I could trade it back to that fair value. And you can see it did this a couple times, and then by this time it's 8:59. And you can see it's the same thing here, right? But we eventually broke through and we pulled back to our next level, which is 604, okay, or 605 actually, between those two. And you can see, what is this red bar, right? This big defense wall, it's 605, right? This is likely to get defended just because the interest kind of dies out after this, and the bigger the bar, right, the more of a wall it acts as. So like I said, you want to avoid, trading it multiple times. I like to do the first pullback and then trade it up. All these other pullbacks, they're lower probability, right? Obviously this one would have worked, this one would have worked, but this one you would have got stopped out, right? So I always take the first one. And as you can see, we pull back to an even more undervalued area down at this 604, 605. And we want to confirm it with the market flow software, and we can see we have extra confirmation. This is likely to be defended by the institutions, right? That 605 area, we trade it back to VWAP. This would have been a huge trade, okay? So let's go back to the next day and we can see what happened here. Okay, this day we're pretty much above the VWAP the whole entire time, so we never got a setup for this specific strategy. So that's fine, right? We skip these days, go back to the next day. We can see this one right here is where, this is kind of a good example. Okay, so let's go to this day, November 13th. Okay, and we're going to go to the 13th here. And it looks like we originally pulled back to that first deviation a few minutes since the market opened. Now you can see these volatility bars basically kept expanding. So again, you want to use this as a confirmation, even with the market flow as well. This is just like an entry confirmation. We can see right here, it started decreasing, right? The bars barely started decreasing, but there's no bullish candles. This candle was bullish, but the bar increased. So there wasn't really any setups, right? Until we pulled back at 744. So let's see what the flows look like at 744-ish. And we can see nothing really here, right? We're in negative territory. We could go to 610. I'm not sure, right? I don't know. There's not a clear confirmation. Obviously, we did bounce off this area and that would have been a nice trade, but there wasn't really a guarantee that would happen, right? There wasn't a high probability. So in that case, I would ignore that day, right? We already pulled back. We went back to VWAP. We missed the trade. There was not really a clear confirmation on the flows. So therefore, I ignore, right? Now let's go to another day. Okay, on this day, as you can see, we first pulled back. That first deviation was at around 621, and then we ended up pulling back a little bit more. So let's see what the flows look like on November 12th. Okay, so we're going to go to November 12th here, and we're going to see what this looks like. Okay, so we're going to go, where did this first pull back to it? It's around 742. Okay, as you can see, it's holding the first positive bar at 622. It's actually 621 would have been the real level. So we mark out 621, right? Okay, and this is our red bar defense area. Now you can see we didn't get to it until this candle. We sold off a little bit under it. The volatility bars keep on expanding, right? Keep on expanding until the peak was the 750 candle. Okay, so let's see what it looked like at 750 where we'd actually be looking for the entry. Okay, we go forward to 750 and you can see pretty much what happens. Okay, 9:50 Eastern time, 620 becomes the new red bar, right? And now we have an A+ setup where we have a red bar defense, right? As you can see, what happens is the volatility bars eventually start decreasing, like right here. We get in, right? So we get in around this candle, and we want to put our stop, I usually like to do it 5 to 10 points below the low on NASDAQ, and we trade it back to that VWAP area right here. So not a huge risk reward, but a decent trade. And like I said, if you confirm it with the institutional positioning, right, the market flows, then the win rate's pretty high, right? So you don't need a crazy risk reward, although some trades do provide that depending on how far we pull back to. So again, target is always VWAP for the setup. Now let's go back to, we'll do a few more examples here and just keep showing you how this works. So anyways, we can see on this day, Tuesday, November 11th, okay, and we can see we have a big defense red bar at 620. Okay, so we're going to go ahead and draw that down on 620. Okay, and this is a little bit above the first deviation, which I don't like as much, but it's pretty dang close where you can see all these candles were kind of like reversal wick candles. And then we got a huge lowering of this volatility as soon as we got this candle. So we'd probably enter around right here and trade it back to VWAP. So this is a pretty small trade, but risk reward is still decent. If you put the stop, a little bit under the low, and then you trade it to VWAP, you're still getting that 1-to-1 on that, right? And you can see we only want to trade the first pullback. We got the second pullback, pretty much went to VWAP again, and then this thing started chopping around and going down, but it eventually reversed, right? And you can see down here was 618, 617 area. We can kind of see what that looked like. Looks like it was this next peak of the bar. It died down after that, right? We can obviously go forward and kind of see what that looks like. You can see 617 is the new red bar, right? And that's where we actually pull back to. Obviously, if you would have got in on a trade like this, where we get these green bars, right? Volatility is expanding and then it shrinks, right? You would enter on this candle. It's a bullish candle. You can see, obviously, when you catch trades like these, they're going to have a little bit bigger risk reward, right? So anyways, let's do another example here, and we can see this one. This is actually a good example because we first pulled back to this first deviation and it didn't work. And then we pulled back to the second one and that ended up playing out. So let's look at what this looked like. This was November 10th. All right, so that first deviation level was around 619. Yeah, around 619. And then the next one was around 617 was that second deviation. Okay, so let's see what the flows look like, because we first traded, in between the VWAP and that first deviation, kind of bouncing around there. Then we got the pullback around 8:51. So that's going to be around 10:50 Eastern time. So I'm going to go forward here and we're going to see kind of what it looked like. So as you can see, we're trading at 620, right? This first positive bar at 620. Now, if we actually look at where's that first deviation level, it's actually at 619. Okay, so you can see 619 was this very small bar. Chances are if we're down here, we're most likely going to want to pull back further. Sometimes you can still trade it if we're, holding that first positive bar, but it's just a little bit more risky because we usually like to get closer to that red bar, which in this case, it was 617, right? And if we look at this, where is the next deviation, right? It's at 617. Where did price literally bottom out at? 617. So as you can see, look at this trade, okay? We pulled back to here at 940. All right, let's go and look at this. 1140 Eastern time. And we can see, right, we have a nice balance of flows, okay? Look at the difference here. We have very small negative and we have huge positive. This tells us the price is going to want to rip back up to fair value or even to high a day. Okay, we look at this, we can enter as soon as this volatility decreases, which is the next bar, wait for a bullish candle. And it looks like this candle was bullish, so we'd get in around right there. Oops. Put our stop on the lows under the level. And then we can trade it back to this VWAP, right? And we get a nice 2.68 risk reward. Now, if you have a little bit more experience, you can see, wow, this market's very bullish, right? I mean, look at the balance of flows. There's almost no negative. If it was a more balanced market, the negative bars would be the same height as the positive bars, right? But you can see there's a big pull to the upside. Okay, if you have more experience, hey, listen, flows are looking really good. We could probably ride this the high day, and you can get a huge risk reward. You can see the market pretty much just ripped up the rest of the day. And that lines up with that first deviation. So anyways, guys, that is the VWAP trading strategy. I'm looking for pullbacks on more bullish or balanced markets to those first or second deviation levels. And I do this by confirming where the institutions are positioned and looking at the flows of the market, right? And I'm seeing, is it a more balanced day? Is it a more bullish day? Good chance we're going to bounce here. We're under the VWAP. Price is undervalued, and there's a good chance we're going to pull back to that fair value price. So anyways, guys, I hope you enjoyed this training. If you want to trade with us every day inside the market flow, not only do you get access to these flows in this real-time data, right, the market flow platform, but you also be able to trade live with me daily. We do weekly mentorship calls in our community. We have a private community training, direct WhatsApp access to me. This is all available inside the market flow software. Just go over to marketflow.co. If you guys want to learn more about how these flows work, you want a little bit more information, I do have a free training breaking all this down as well. That will also be linked in the description below this video. So anyways, guys, with that being said, hope you enjoyed this VWAP trading strategy, and I will see you guys in my next video with another day trading lesson.